Morning and welcome, Patriot Radio News Hour. Joe and Jason on this Hump Day Wednesday. It is the first full week of March, so it is Jobs Week. We'll start with ADP. The number came in lower than expected. Right now, that's, I guess, good news if you're in the, hey, let's not raise rates camp. It wasn't low enough, and ADP, their numbers have been so far off from the government numbers. I don't know that it counts. We'll see. Tomorrow we'll get jobless claims, and then Friday we're going to get the jobs number from the government. Gold and silver, after a huge day yesterday, pretty flat. Pretty flat right now. Matter of fact, gold's down 80 cents. 2021 in change. Silver is down 12 cents right now, 24.98. The Dow is mixed. The Nasdaq's down pretty heavy, down 170. S&P is lower by 20. Right now, the Dow is up 20. We'll see how it all plays out. We had oil inventories all of a sudden without the strategic oil reserve. Big drops. Fifth straight week in a row, Cushing, Oklahoma stocks dropped. Everything was down across the board. Barrels of crude down about 4 million. Gasoline stocks down about 4 million. Distillate stocks down about 3 million barrels. All said and done, about 11 million barrels of crude in various types. Less this week than last week. We did get a few other pieces of economic data. The ISM service sector. Now, that's the bigger sector of the U.S. economy. The manufacturing sector we got the other day. That was below expectations. And the service sector followed suit. It also was below expectations. So I guess if you're saying a good day or bad day for the rate hike camps, I would call this another good day. Not as good as yesterday, but again, things appear to be slowing. But we've got a new bank to watch out for, so I'll have to talk about that and who it is, a local one here in town, here in Arizona. And then, of course, Morgan Stanley warning about commercial real estate. We know what happened the other day. We're starting to see the defaults rise. So we've got a lot of things to talk about. Our toll-free number, 800-951-0592. The website at allamericangold.com. And then, of course, a couple of updates. Metals plans. We are all but done. Colorado, I think they started calling for their pickups last night. If you haven't been notified in Colorado, you will be. Arizona, we're done. Anybody that we mailed, your product has already been delivered to you. If you want to sign up for our metals program, we don't talk about it a whole lot. It's absolutely enormous. But it's really simple. You need at least $100 a month. You pick the amount. There is no limit. And we are sitting here with no limit. The biggest is, again, we got people doing $5,000 every month. We got a lot of people doing $100. We got people doing everything in between. You leave a credit card on file with us. You tell us the day of the month you want us to hit the card from the 1st to the 28th, and then you get 4 physical shipments a year. So once a quarter, you get physical shipments, and we just completed the first quarter shipments, and we're getting ready to start. So if you want to sign up here, it's always a good time to start and sign up at 800-951-0592. And then also, very quickly, product is very, very slow coming. It is not us. The bullion banks are just backed up, and they don't have a lot of great answers for us. I know some of you are a little, hey, gosh, usually I order within a couple of days. I'm coming to pick it up. It's just going to take a little bit. And I wish I had better news on that. I don't. Right now, it used to be if we drop something today, we'd have it tomorrow. Worst case, 2 days. That would be the worst case. Now we're dropping things, and it's 7 days, 10 days before they show up. Just be patient. Everything's coming. And Jason, sometimes when it gets like this, they get overwhelmed. Things get backed up.
Yeah. There's a lot of people, looking at what's going on, and lots of crazy stuff happening. And with the gold and silver, there's a lot of people that are maybe not even bought ever, or people that have just lightly bought, and suddenly there's a ton of customers just flying into gold, and the spot price is being pushed up. And so all this creates a log jam, so to speak, right, Joe? And then takes longer and longer to get stuff. There's nothing we can do about it. The good thing is that just like our company, taking care of our customers all the time, our distributors take care of us. And if we lock into something, they're locking in with us. And so the product and the price is locked. It's just, unfortunately, it's going to take a little while to get to you. But I've been with this company over 5 years. I've never seen a single order not get filled that we promised on. It's just never happened, Joe.
Yeah, well, and I can tell you this, we've been here 27 years. It's never happened, never will. But anyway, we appreciate everyone's patience on all of that. When we get back, we're going to have to talk about what Morgan Stanley had to say and what bank kind of just got on people's radar all of a sudden. That's coming up next. 800-951-0592. Joe and Jason on this Wednesday. As we said, ADP came out, 145,000 jobs. That was below expectations. Kind of maybe good news, bad news type situations here. A quick look at the markets. The Dow is down 40. The S&P is down 17. The NASDAQ's down 150. Right now, gold's down $2. 2019 and change. Silver's down 7 cents, 25.02. This market update brought to you by our friends over at YRefi. Diversification. I mean, that's the name of the game. That's why you buy gold and silver. That's why you look at companies like YRefi. You get some great returns. It's not correlated to Wall Street. Doesn't matter what the stock market does. Doesn't matter. Did the feds blow it? Are they going to make another huge policy mistake? YRefi doesn't care. It's something you can look at your monthly statement every month and not worry, because it's going to look the exact same. And you can earn up to 10.25% returns. You can do whatever you want with those returns. The interest is compounded daily. They can pay you monthly. You can roll it in. You can do what you want. You can change your mind. I mean, you can do all kinds of things. No fees. You got to have 50,000. That's the big key. But you can also use existing IRAs. Check them out. Invest, YRefi.com. The word invest, the letter Y, REFY.com, or call them at 888-YRefi-24. Jason, outside of the economic data, there was another bank making some news here. Western Alliance Bank Corp. This is an Arizona bank. Their stock was down as much as 12% as on some financial disclosures. So this is going to be the next thing now. So banks are saying, hey, this little problem, this little bank run, the first leg of it is over. Now, all of a sudden, we're going to start hearing from these banks as they start disclosing, mandatory disclosure filings about how things are looking. What bothered, apparently, people on Western Alliance was in their financial disclosures, they did not update or say more about what their deposit balance is. Now, this is going to be a very big thing going forward. In the case of Western Alliance, here's what they noticed: that their insured deposits shot way up. Now, when you first think about it, you're like, oh, well, that's a good thing because, the banks that we're watching are the ones where the uninsured deposits are more than the insured deposits. Well, in the case of Western Alliance, what they noticed, Jason, was, hey, you had a lot more uninsured deposits on January 1st than you just disclosed today. So the feeling is a lot of these big uninsured depositors have left that bank. And now they're worried, does the bank have enough money and not have to go to the window or play these games? So it's kind of interesting that we're going to start seeing this now, where some of these banks are going to, without trying to let people know, hey, just look at the math. Look at the numbers. You can probably figure it out. You can probably figure out we lost some pretty big customers.
Will they make it to Friday? That's what it seems like.
I think so. I don't know. You know what? What do I know? The thing is investors are saying, hey, if this was a good thing, they would have said so. The fact that they didn't say anything, right, which makes sense, right? Hey, listen, if it's not good news, let's not tell anybody. It's the fourth update since March 10th, and it's the only one where they didn't address the deposits. So, again, the thinking here is these depositors, here's my guess. You know what? They didn't have another bank set up. And they got one set up, and then they moved the money, right? Because that takes a while. It does. You don't just set these things up willy-nilly overnight. You need to get credit lines. You need to do all kinds of stuff. That's just my guess. But we'll have to wait and see. Their insured deposits now represent 68% of the bank total as of March 31st. That was higher than the 55% that it disclosed 2 weeks ago. So that's a big move. So that just tells you, hey, at least one, if not more than one, of these big unsecured depositors left that bank, Jason. It's pretty simple here, and now people are a little bit worried.
Yeah, and you should be, if you understand how our economy, our monetary system was run. You should have been worried, decades ago. Really, you should have been worried years ago. But here we are. We're seeing the ultimate destruction of this financial system. It was going to happen. It's a Ponzi scheme, and I think these reports will keep coming, Joey, week after week, month after month, until massive changes happen. And I always can't wait to see which bank you're going to talk about. I'm always calling and looking around too, but it's like which one's next. It's like there's a line at the bank bust window, and you don't know who's in line there next. You're only dealing with the one that's in front of you. But I think there's quite a few of them in line.
Yeah, and you just don't know, right? You see a filing like that, and then when they don't give you any guidance, that's a mistake as well, right? And obviously, I think they didn't give any guidance because they didn't have any good guidance to give, right? Hey, our insured deposits were 55% on March 16th, and now they're 68% on March 31st. I think everyone can kind of figure out what happened, right? And again, how vulnerable does it leave them? I don't know that. I don't want to, cause panic here, but this is a bank now. Its stock has lost over 50%, including down 12% more today. You got to pay attention to that stuff.
What's the name of that bank again, Joe?
Western Alliance Bank Corp is the one. So, and again, I don't want to add fuel to fire, but we may start seeing a lot of these. Morgan Stanley, man, they came out and just hammered the commercial real estate market and saying that this is going to be worse than the financial crisis in regards to commercial real estate. It is going to be much, much worse. They said the work at home COVID era has created a major shift. And here's the problem, and this is what we've talked about. Half of the commercial loan market has to get refinanced over the next 24 months. Half. And this is over a $5 trillion market. And so far, Jason, we're seeing 30, 40. In LA, we saw 50% losses. Morgan Stanley says they expect more than 50% of the 2.9 trillion in commercial mortgages that need to be renegotiated are going to face what they call a huge hurdle, and saying they expect losses that could exceed 40%. The downturn in office vacancy rates. So it's at a 20-year high on office vacancy rates. They're saying a decline in price of 40%, which will be worse than the great financial crisis. Distress of this type historically has not only hurt the landlords and the bankers who lend to them, but is also interconnected business community, private capital funders, and owners of any underlying securitized debt. The tech and consumer discretionary sectors will not be immune. Fear, stresses, and other asset classes will likely emerge, will become another headwind for mega cap stocks, along with those posed by profits of recession and or economic recession. Jason, all in all, Morgan Stanley says we got more problems coming. Pretty simple, right? We've got $2.9 trillion worth of commercial real estate that needs to be refinanced in the next 24 months. And Jason, they're all underwater, and a lot of them underwater by at least 40%.
Yeah, a lot of that low interest problems that we've been talking about. You got banks that are failing because they have the wrong, low interest products in their portfolios, and then you can imagine if you have both that and you have a bunch of commercial real estate that's going under too, Joe. I mean, compounding the problems. Who knows how much this bank stress is being caused by because we heard that they're holding the wrong treasury. These 0% low interest treasuries. Now here we are, with much higher interest rates, which has caused some of these banks to go in the wrong direction. Now you got the commercial real estate. These ARM loans are kicking in every single day, more and more, I'm sure. So, good luck to the banks that hold both of those situations, Joe. This is a compounded problem now.
Yeah, and it's a tough one because the ARM loans, it's not the small guy. It's not the small guy, right? He may be, buying a suite in a commercial office complex. Maybe he's the office complex, I don't know, it's 100,000 square feet. He may be buying, 3,000 of the 100,000, right? And he's probably on some type of SBA loan, right? That's not the problem. It's the guy and the bank that lent money on the whole building. There's where the problem lies, because it's those guys that are going to default. It's those guys, the landlords, are the problem this time around, not the tenant. Of course, obviously, vacancy rates already too high, but when they go to refinance, they do these on these ARMs. They pay interest only. Not only has the value of the building dropped, but to Jason's point, now with the higher interest rate, right, now the payments are higher on top of it. And guess what they're doing? They're just saying, hey, you know what? Jingle mail. Here you go, banks. Here you go, venture capital, whoever decided to lend them the money. Here's the keys to the property back. And Jason, that's where this problem is. And we know where the 60% of these loans reside in these banks that are not too big to fail.
There you go. Those are just the numbers, and so that spells even more trouble. And I don't think China had the same problem as we were talking about that stuff a year and 2 years ago. But it's the same kind of situation. They're just the housing market in China is bad. Well, the commercial real estate market in this country is bad, and when you have interest rates at zero for so long, there are consequences. Just like when you print money like crazy forever. And 0% interest rates and printing money is something they've been doing and doing and doing and doing. And at the point of no return, how many years ago was that? The point of no return was probably 15, 20 years ago, to stop doing this stuff, Joe. They fixed the housing crisis in 2008 by doing this stuff. And all they did was just move the problem to 2022 and 2023 and so on. And I don't know, Joe, with the kind of gold buying that we're seeing, it's not just Joe and Jason on the air talking about this. People are figuring out, well, I don't know where to go, and gold is safe. And they're just, I never thought Joe would say some of the things he says to me as we're talking before we get on the air about how sticky it is to get the gold in our possession and get it to our customers. It's happening, but man, waiting 3 weeks or waiting 4 weeks that's a tough thing, Joe.
When we get back, how much money have the banks borrowed, and how much of it's been the small banks versus the big banks? All of that in a really decent special coming up next.